Investing in crypto assets has always been a hot trend among investors around the globe. In today's fast and highly competitive financial markets, it's very rare to see someone who's not heard of Bitcoin. Bitcoin laid the foundation and brought the term cryptocurrency into our daily lives. Bitcoin investment is generating a lot of buzz on the internet, which is why learning how to invest in Bitcoin is very important. But is Bitcoin a viable investment for the average investor? And should you consider investing in them? In this episode, you will learn what Bitcoin is and why you should invest in them, benefits and disadvantages of investing in Bitcoin, plus one trivia question about Bitcoin investment. Today's trivia question is, who is the real creator of Bitcoin? What are Bitcoins? Bitcoin is a virtual currency that's controlled by a decentralized network of users and isn't directly subject to the whims of central banking authorities or national governments. Although there are hundreds of cryptocurrencies in active use today, Bitcoin is by far the most popular and widely used, the closest cryptocurrency equivalent to traditional state-minted currencies. It has no physical backing and can be sent electronically from one user to another, anywhere in the world. Because there are a finite number of the coins, there is scarcity, so the value constantly fluctuates. Mining. When you hear about Bitcoin mining, you envisage coins being dug out of the ground. But Bitcoin isn't physical, so why do we call it mining? Mining is an important and integral part of Bitcoin that ensures fairness while keeping the Bitcoin network stable, safe, and secure. Similar to gold mining, Bitcoins exist in the protocol's design just as the gold exists underground, but they haven't been brought out into the light yet, just as the gold hasn't yet been dug up. The Bitcoin protocol stipulates that a maximum of 21 million Bitcoins will exist at some point. What miners do is bring them out into the light a few at a time. Once miners finish mining all these coins, there won't be more coins rolling out unless the Bitcoin protocol changes to allow for a larger supply. Miners get paid in transaction fees for creating blocks of validated transactions and including them in the blockchain. With Bitcoin, miners use special software to solve mathematical problems and are issued a certain number of Bitcoins in exchange. This provides a smart way to issue the currency and also creates an incentive for more people to mine. Bitcoin transaction volumes. Beyond its anonymous nature, Bitcoin has the potential to change the way we bank, make transactions, and view money. As of 2013, Bitcoin transactions totaled about $8 billion, compared to the combined transactions of the Bank of America, PayPal, Western Union, Automated Clearinghouse, ACH Network, and Fedwire, which stood at $599 trillion in 2012. In addition, financial experts added that while the Visa credit card network can process 20,000 transactions in a second, the Bitcoin network can facilitate 7 transactions per second. This means, on average, Bitcoin can handle 1 transaction per second. So, what are the benefits of investing in Bitcoin? Let's take a closer look. Advantages of Bitcoins. 1. Protection from payment fraud. The major benefit of using Bitcoin is that it helps to protect transactions from fraud. Compared to the use of credit cards, payments involving Bitcoins cannot be reversed by the sender. 2. Increasingly wide acceptance as a payment method. Hundreds of merchants now accept Bitcoin payments, thanks to heavyweights like Overstock.com jumping on board. It's possible to buy virtually any physical item using Bitcoin units. If you're serious about reducing your exposure to government-controlled money, Bitcoin's growing mainstream acceptance is likely to be a big help. 3. User autonomy. The primary draw of Bitcoin for many users, and indeed one of the central tenets of cryptocurrencies more generally, is autonomy. Digital currencies allow users more autonomy over their own money than fiat currencies do, at least in theory. Users are able to control how they spend their money without dealing with an intermediary authority like a bank or government. 4. Accessibility. Because users are able to send and receive Bitcoins with only a smartphone or computer, Bitcoin is theoretically available to populations of users without access to traditional banking systems, credit cards, and other methods of payment. 5. Lower fees. Compared to other digital payment methods such as credit cards and PayPal, Bitcoin comes with lower transaction fees. Though such fees are variable, it's rare for a Bitcoin transaction to cost more than 1% of its value. Compare that to 2% to 3% for most other digital payments. 6. Fast and instant transaction. Bitcoin transactions are very fast if compared to banking channels. A Bitcoin transaction is as fast as an email and can be processed within 10 minutes. Also, it can be instantly processed if there are zero confirmation transactions, meaning that the merchant takes on the risk of accepting a transaction that hasn't yet been confirmed by the Bitcoin blockchain. The confirmed transactions are those which take at least 10 minutes to process. Credit card or digital wallet services also provide instant approved transaction services, but for this, they usually charge hefty fees, which is not in the case of Bitcoin. If you're unsure about how to invest in Bitcoin, make sure you hit that subscribe button and stay tuned for our future episode covering that topic in detail. Limitations and risks of Bitcoins. As with any other payment methods, there are disadvantages of using Bitcoin. Some of them are: 1. Environmental impact of Bitcoin mining. Bitcoin mining consumes vast amounts of electricity. According to Business Insider, some of the biggest Bitcoin mining companies are based in China, where most power comes from dirty coal plants and horrific smog routinely makes even low-key outdoor activity unsafe for healthy adults. In the long run, widespread adoption of low or no emissions energy production will hopefully mitigate the environmental impacts of Bitcoin mining. In the meantime, however, it's a growing threat to an already fragile planet. 2. Cyber theft. Bitcoin is technology-based, which leaves this investment open to cyber attacks. Hacking is a serious risk since there is no way to retrieve your lost or stolen Bitcoins. Many reports suggest that many buyers lose their investments on exchanges and mining losses. Exchanges are more likely to be hacked, even if you have the protection of a smart wallet. Additionally, if you do have a wallet and you forget or misplace your key, there is rarely a way to retrieve your coins. 3. No chargebacks or refunds. One of Bitcoin's biggest drawbacks is a lack of standardized policy for chargebacks or refunds, as all credit card companies and traditional online payment processors have. Users affected by transaction fraud, for instance, they purchase goods that the seller never delivers, can't request a refund through Bitcoin. In fact, Bitcoin's decentralized structure makes it impossible for any single party to arbitrate disputes between users. While miners take responsibility for recording transactions, they're not qualified to assess their legitimacy. Some newer cryptocurrencies, such as Ripple, have rudimentary chargeback and refund functions, but this feature has yet to be built into Bitcoin. 4. Lack of security. In addition to hacking, there is a fair amount of fraud in the Bitcoin market. Buyers and sellers are looking to trade Bitcoins online, but since their rise in popularity, some of these exchanges can be fake. The Securities and Exchange Commission have warned against these transactions, where unsuspecting investors are duped out of their Bitcoins in fraudulent exchanges. This lack of security creates a big risk for investors. While systems have been created to deal with these problems, security remains a big issue. Now you know the disadvantages of investing in Bitcoin. Let's now see whether investment in Bitcoin is worth it or not. Is Bitcoin a good investment? Bitcoin is at the high-risk end of the investment spectrum. The price of Bitcoin is volatile. It can go bust, and occasionally it may increase in value and produce a return for investors. As financial experts put it, Bitcoin could remain niche, become mainstream, vanish without trace, or anything in between, and any investment should be considered as very high risk. In a bid to curb potential risks in Bitcoins, the governments of China and France have since issued warnings to Bitcoin users to be wary of inherent risks in the use of Bitcoin. In India, the government is also expected to issue a similar warning. As with any investment, do your due diligence and don't pin all your hopes on one company or Bitcoin. Spread your money around so you spread the risk. Back to today's trivia question. Who is the real creator of Bitcoin? The real creator of Bitcoin is Satoshi Nakamoto. Till date, Satoshi Nakamoto has remained anonymous so that Bitcoin users can focus on the technology itself. That's it for this episode. Please give us your feedback in the comment section below. To watch more episodes on financial topics like this, hit that like and subscribe button. If you want to support us even more, buy us a coffee from the link in the description. Good luck and see you in the next episode.